This is the chart of accounts. This is probably how you're feeling right now looking at QuickBooks. If the chart of accounts isn't set up correctly, your reports won't make sense, taxes get messy, and yeah, your CPA is probably going to get a little annoyed. A lot annoyed. And if you mess this part up, everything else in your bookkeeping starts to fall apart. So in the next few minutes, I'm going to show you exactly how you can set up your chart of accounts so your books stay clean, accurate, and actually useful. I want you to think of all the accounts in the chart of accounts like organized containers, such as income, expenses, assets, equity. Everything that has a monetary value in your business will live in the chart of accounts. You can think of it as the backbone of your entire accounting system, and it all runs on something called double entry accounting, which I'll explain in simple terms later in this video. And what you're about to see is actually a snippet from a full 2.5-hour QuickBooking course, which is completely free to you. It lives right here on YouTube, and I'll be sure to link that video in the description box below. In that course, I walk you through everything you need to know about how to use QuickBooks in order to do your own small business bookkeeping, step by step, and with plenty of practical examples. And if we haven't met before, my name is Andrew Bloom. I'm a PhD student in business with a concentration in accounting. I'm also a QuickBooks ProAdvisor and a virtual bookkeeper to small businesses. I have spent years studying accounting, and I'm sharing this knowledge here on YouTube so that small business owners don't have to learn this the hard way. So if you're serious about running your business in a professional way and not just a side hobby, be sure to subscribe to this channel. All right, let's set up the chart of accounts the right way. All right, from here, we're going to start to dive into the world of Maple Street rentals. So the first thing we're going to do is set up the chart of accounts. To get to the chart of accounts, you can either come up to the gear icon and select chart of accounts under your company, or you can come to your bookmarks, because I told you to bookmark this, select chart of accounts from here, or under accounting, you can go to chart of accounts from the app here. Okay, so here we are in the chart of accounts. And QuickBooks will automatically populate the chart of accounts with a lot of basic accounts, but also certain accounts that you cannot delete because they are being mapped to certain functions in the software. So for instance, you have an account called accounts receivable. This is going to be a total of all of your open invoices, basically money owed to you by customers or clients or tenants that haven't been paid yet. And they're a kind of asset. They'll show up on the balance sheet. This is going to be tied to your invoices. The software in the back end is being mapped to the invoice system in QuickBooks. So that's an example of why if you try to inactivate all of the chart of accounts and upload your own, you're going to run into an error with QuickBooks telling you that you can't inactivate certain accounts, and accounts receivable is one of those accounts. So before I go in too deep, let me begin by saying the chart of accounts is kind of like the backbone of the accounting system. So each of these is like a bucket, and the bucket is saying, in my bucket, here's all these transactions that relate to a specific feature in the business's finances. And the chart of accounts is highly dependent on something known as the accounting equation. So QuickBooks, Wave, all the software you see online that's built for accounting is all dependent on something known as double entry accounting. And that means that with any transaction, there's always going to be at least two accounts affected. And you're going to be asking yourself, what does that mean? So double entry accounting is dependent on a certain equation called the accounting equation. And that equation means assets equals liabilities plus equity. You probably know what an asset is. It's like cash in the bank. It's the house that the business owns or you own. Assets are everything the business owns. And this can also include things like accounts receivable, money that's owed to the business, or inventory. And on the other side of the accounting equation, you have liabilities and equity. Liabilities is pretty easy to understand too. These are all the people who you owe money to. It could be the loan from the bank. It could be a balance on a credit card. It could be money you owe to your vendors for services that you've used but you haven't paid for yet. And the last section, this one's a little harder for folks to understand, is equity, because it's a term that gets thrown around a lot in finance. But in this case, equity is basically all the money that belongs to the owner. It could be from money that the owner put into the business, the investment to start the business. It could also be all the retained earnings, all the income after paying for expenses. All that income is a profit to the owner. That's equity. So when you take all of your assets and you subtract all of the liabilities, that leaves you with all the equity left over. So this equation always has to stay in balance. And an example of that is Maple Street Rentals owns a multifamily home. And let's say that home costs $300,000. So the value of it is $300,000. And it's owned by the business. So under assets, you have a $300,000 home. So, however, let's say that the owner invested $100,000 into a down payment and took the rest out, the $200,000 left over, as a loan from a bank. Now we can see that even though the business owns $300,000 of this property, $200,000 of it is a liability that needs to be paid to the bank, plus $100,000 that was contributed by the owner. So another way of saying assets equals liabilities plus equity is that what we have equals who owns it. So I know that was a lot to take in, and trust me, you don't have to understand this right now. If you do want to go more deeply into this type of accounting education, I did make a pretty decent webinar recently explaining all this and how it relates to bookkeeping. You can watch that here. But for now, what I want you to understand and take away from this is that you can't just label and categorize your transactions willy-nilly in QuickBooks. Every transaction is going to be affecting two accounts. So in that example, we have an asset account that was affected by the purchase of that house. We also have an equity account that was affected as well. Both increased. Same thing with the liability account. So you have to be very careful with how you categorize all of your transactions. Most will make sense, but every now and then some require a little extra work, and that's where you'll create journal entries. But the problem is you don't know what you don't know. So I do encourage you, if you are trying to do your books yourself, that's fine when you're small. At some point, as your business grows and it becomes more complex, I highly, highly encourage you to get a bookkeeper, an accountant to be doing your books for you. And it just so happens I am one as well. So I would be happy to do your books for you if you want to make sure they're done accurately. And until then, I'm going to do my best to educate you so that you can help yourself without creating more problems. Okay, so done with my spiel. So all of those accounts that fall under assets, liabilities, equity, you're going to find them all here on the chart of accounts. And just think of each one as like a bucket. They're not necessarily physical accounts. Like there's no physical account for, like you don't have a bank account that's just office equipment. It's just a category that we're labeling all of our transactions and saying they relate to this. However, there are other accounts in the chart of accounts, such as your bank account, your credit card, which are physical accounts. And those need to be tracked separately from one another. So if for every bank account you have, you're going to need a separate account for it in the chart of accounts. So in QuickBooks, you'll have your list of accounts, and you'll notice this green button here. It's not a button, it's just a green label. This means it says BAL, that stands for balance sheet. It just means these accounts are going to be found on your balance sheet. And if you go down, you'll see one for profit and loss. These accounts are only going to show up on your profit and loss statement. And we'll go over what those reports are later on. If you want to add accounts to your chart of accounts, you'll come up here and select New Account, and you'll give it an account name. You'll also have to give it an account type, and this is important because it's going to tell you whether this account shows up on the balance sheet or the profit and loss statement. And it does matter for tax time for your accountant or your CPA to know exactly how to categorize your income or expense in the tax forms and whether it's deductible or not. You can also make sub-accounts. So for example, let's say in this rental property service, they own that multifamily house that I mentioned earlier. And because in real estate, property can be a form of an asset, if it's intended on being sold in the future, it can be treated as inventory, especially with flips. Let's say we're going to create an account, and this isn't necessarily how I would do it with my real estate investing companies. I just want to show you how to use QuickBooks, so don't copy what I do here for your real estate property. I really just want to show you all the different features in as simple of an example as I possibly could give. So let's say we're going to add a new account to track specifically one property from another, because we want to see the values listed separately on the balance sheet. We'll say that property is 1234 Maple Street. The account type is going to be an asset, and we're going to say it's an other asset, and the detail type is going to be a other long-term asset. They plan on owning this property for a long time. And you could add in an opening balance. For this, we're just going to leave it as is and add the transaction, the journal entry for it later on. And we'll hit save. And now you can see down here that Maple Street has been added as an account to the chart of accounts. Now, remember I said this asset is worth $300,000, but the balance here says 0. So remember, this is just a bucket. This is just saying like, hey, this is the category for this asset. We'll add in the actual transaction later on to record the purchase of that property. So in the chart of accounts, you're going to see a lot of different account types. You will see assets, the things that are usually property, plant, equipment that's owned by the business. It can also be your accounts receivable, money in the bank. You'll also see liabilities like sales tax payable, that sales tax that you're holding on from sold items that you owe to the state government. And this is where liabilities, you'll include your credit cards for the business. You're going to see equity accounts as well, such as owner's draw and investments. This one's really important whenever you, as an owner of your business, put money into the business or take money out to pay yourself, especially as an LLC. These are the accounts that are going to track that. And then you'll see some income accounts. This is how you're going to track sales and services in QuickBooks, and I'll show you how you're going to connect that to your products and services later. You also want to track cost of goods sold, which is a little different from expenses. These are the costs that go into creating your product. So they're tracked separately from expenses, which might just be general business expenses like advertising and labor, employee salaries, and wages. So these are the expenses. And there's a lot of different expense accounts. Usually this is most of what businesses are tracking, expenses and income. So now it's your turn. Let's say Maple Street Rentals has a bank account and a credit card account. The first is Scrooge Duck Vault Bank, and it's a checking account. And the second is Chase Bank. It's a credit account for a credit card. How would you add these two accounts to the chart of accounts? What account type are they? What's their detail type? Take a moment and think about this. All right, and when you're ready, the answer is that to first add the checking account from Scrooge Duck Bank, Scrooge Duck Vault Bank, we'll include the account name, we'll include the account type, which is a bank, and the detail type is going to be checking, and we're not going to add any other information yet, and we'll just save it as is. Note that we have not connected the account yet or included any transactions, so this is just an empty bucket for now. And then for the credit card, again, we'll do new account. We'll include Chase Bank. The account type is going to be a liability. It is a credit card, and the detail type is credit card. And again, just a bucket for now. The accounts are not linked yet. So now in the chart of accounts, we see Scrooge Duck Vault. It's a bank account. It's an asset. It's going to be on the balance sheet. And then down here we have Chase Bank credit card, also going to show up as a liability on the balance sheet. So once you're in the chart of accounts, a couple other features we'll go over quickly before we move on. If you want to change a couple things, like a handful of accounts at a time, let's say you want to get rid of a bunch of the chart of accounts and replace it with something else you're going to upload, you'll select all the accounts and then hit batch actions, and you can make them all inactive. You can't necessarily delete them, but they basically get hidden. And then here you can search for any of the accounts in here. You can also shorten the list by just balance sheet accounts or just profit and loss accounts, or the ones that we created. And there's other editing tools over here, such as going through and editing all the names. And then under settings, you can decide which columns come up. You can decide whether you want to include inactive accounts on this list, and you can decide how long you want the list to be. One other thing to note with chart of accounts, each individual account, you can see all the transactions related to it by clicking View Register, and under there, you're going to see a list of all the transactions that come through that account. And the chevron on the right is basically an action tab. Here's an option to connect this bank account, to edit the account, make it inactive, or run a report. So that's pretty nifty. All right, you're doing great. I applaud you for learning and sticking around. Next, we're going to move forward and